have recovered very slowly, surprisingly slowly. So far, the market is down 65% year to date. July is running so far down 73% versus 2019 normalized levels. Visitation has started to pick up month on month, but it's still 75% of where it was in 2019. We do cover these globally. I speak with my colleagues every Monday morning, and we publish some commentary on Macao, and we've started to refer to it as our weekly staring contest. Because quite frankly, in a big surprise, as I said, Macao has recovered much more slowly than what we're seeing in the domestic gaming markets, where we have a preference.
Is there opportunity in a staring contest? Is it prudent to make a move in this market right now?
Somebody always wins in a staring contest, and somebody always loses. Look, we've continued to keep our positive rating on Las Vegas Sands. It has not performed well over the past quarter at all. We picked it because of its strong capital position, strong exposure to the recovery that has just been very slow in coming. The issue, I think, really with the stock is that despite their very strong capital position that's about to get stronger on the sale of the Venetian in Las Vegas, management really hasn't defined where they're headed since the passing of Mr. Adelson. They haven't defined what to do with their strong capital position of a couple of billion on the balance sheet, $6 billion more on its way in the door once they do close on Venetian. And so I think some of that uncertainty has weighed on the stock, as well as the very slow recovery that's really not showing meaningful signs of improvement.
What do you think it would take for that recovery to really ramp back up again? Is it the issue of the variants, or is there something else going on?
It's not the variants per se. It is the travel restrictions that are in place in getting into Macao. Now, mainland China has improved just a little bit over the past week or so, where now a negative test result, as well as 7 days of medical observation, is what's required. And that has shifted compared to Hong Kong and Taiwan, where there's still 14 and 21 days of quarantine required in order to enter Macao. And so the travel restrictions have really made visitation, severely constrained. And therefore, the revenues can't really follow. And so I think, just safety, security, and access to that market is what it would take for the recovery to start to gain some meaningful steam.
And of course, we've been talking about regulation pretty much for the entire hour, but that is certainly the case in Macao, too, with oversight being stepped up in that region. Is that a headwind for the industry there as well?
It absolutely is. So the VIP business or the junket business has been a meaningful driver of volume in that market, but has encountered periodic crackdowns. And under President Xi, it's been much more severe, and that does not appear to be letting up. So we consider that VIP business to be in secular decline over the long term. And when you look at our estimates today at, say, Wynn versus Las Vegas Sands and MGM, they are a bit lower for Wynn as a result of their higher exposure to that VIP and the regulation that's upon it.
Yeah, it's pretty remarkable, especially, all of the other headwinds that are, approaching Macao right now with regard to the variant, with regard to the certain quarantine requirements over there. This is just one other thing that the area has to contend with. Thank you so much for joining us, David. We really appreciate it.
Shepard Smith here. Thanks for watching CNBC on YouTube.